大変お待たせいたしました。
Thank you very much for waiting and taking the time out to join us today. We will now start the press conference for NTT Data Group financial results for the first quarter of the year ending March 2025. Let me introduce today's presenters. NTT Data Group Representative Director and Senior Executive Vice President Kazuhiko Nakayama. Director and then Senior Vice President, Head of Corporate Headquarters, Tadaoki Nishimura. Corporate Headquarters and Head of the Finance Department, Keisuke Kusakabe. I'm your facilitator, Fukunaga of the Public Communications Department. And today's presentation consists of two materials, financial results summary and a company presentation, which are available for download on our website under Investors section. Now, Mr. Nakayama will present the financial results for the first quarter of the year ending March 2025. Floor is yours, Mr. Nakayama.
NTT Data Group の中山でございます。
This is Nakayama from NTT Data Group. Firstly, thank you very much for attending the earnings result briefing session despite your busy schedule. Here is today's agenda. Firstly, I will explain Q1 results of the fiscal year ending March 2025. Please move to page 4.
こちらが第一四半期の実績の概要。
This shows the outline of the Q1 results. New orders received, helped by data center business abroad and domestic businesses that are performing strongly, posted a large increase of 466 billion yen year-on-year. Net sales was up by 97.1 billion yen year-on-year, and against a full-year forecast, it is making a steady progress. Operating income was on par with the previous fiscal year, while profit attributable shareholders of NTT Data was down by 6.4 billion yen. However, it was broadly on track. Thus, no change to the original full-year guidance. Please move to page 5. Before I walk you through, let me explain how we have segmented our businesses in our disclosure. Since April 2024, we have moved to a new global business operating structure. As shown at right, the overseas segment is now broken down into North America, EMEAL, APAC, and Global Technology and Solution Services, or GTSS. So this is a change. The Japan segment's breakdown remains unchanged. Now let me take you through some details by each measure. Page 6, please. New orders received. Both Japan and overseas performed strongly, and the year-on-year result was significantly up by 466.6 billion yen. In the Japan segment, the public and social infrastructure business won large deals from central government and ministries, plus the enterprise and financial businesses performed well in taking orders, and the result was up by 72.8 billion yen. In the overseas segment, GTSS, mainly in UK and India, increased data center business for hyperscalers, leading to an increment of 394.3 billion yen. Even excluding the FX impact of 117.5 billion yen, the result increased by 276.8 billion yen. Next, net sales. All in all, it was up by 97.1 billion yen, but this includes the FX impact of 82.2 billion yen. As for the upward-downward factors other than the FX impact in the Japan segment, the public and social infrastructure business upscaled its project for the central government and ministries, contributing to an increase, and the financial and enterprise businesses also grew sales, therefore recorded an uplift of 15.9 billion yen. In the overseas segment, GTSS data center business for hyperscalers and ACP business steadily grew. Conversely, North America, EMEAL, and APAC reduced sales of communications equipment and the segment result was slightly down if we excluded the FX impact. Please move to page 8. Next, operating income is almost on par with the previous fiscal year, but it is, as mentioned earlier, against the full-year forecast, it is almost on track. Incremental factors include 3 businesses in Japan grew sales and profit, and previous year's overseas business structural transformation cost, which is absent this fiscal year. On the other hand, downward factors can be found in the Japanese financial business, which had won a high profitable deal in the previous fiscal year, and that's absent this fiscal year. And also the overseas segment, which recorded lower sales of communication equipment, leading to less profit. As a whole, the result was up by 300 million yen. Please move to page 9. This slide supplements information on the overseas segment results. As explained so far, the overseas segment sales experienced the FX impact and data center and SAP business growth, recording an increase, and North America, EMEA, and APAC units in the previous fiscal year had the upward impact in communication equipment sales owing to supply chain recovery, and that impact is absent this fiscal year. So due to such reduced sales, it indicates a moderate year-on-year growth rate. As for EBITDA, it was impacted by the equipment sales reduction. However, the absence of the structural transformation cost pushed up the overall segment's profit. From here, let me cover some major topics. Please move to page 11. This shows the new leadership of the NTT Data Group. In June, the NTT Data Group, the holding company, appointed Yutaka Sasaki as new CEO, and NTT Data Inc., the overseas business operating company, appointed Abhijit Dubey as new CEO. And the management has been working together to further drive the group's business. Page 12, please. This slide is a part of the deck used at the fiscal year 23 earnings results briefing session, showing the current midterm plan's objectives. Under the new leadership team, we will continuously strive for delivering targets. Page 13, please. Here, let me take up one of the goals, consolidating net sales of 4.7 trillion yen. This is for fiscal year 25, and let's look at it from a strategy perspective. Each region is horizontally supported by cross-functional units as growth drivers by creating assets and solutions, and by tapping into DC demand and others, we will continuously drive each region's growth. In addition, each region is working on growing existing business, improving productivity, and increasing delivery by leveraging assets and forging partnerships. In this way, regional units growth is supported by cross-functional units to deliver 4.7 trillion yen in fiscal year 25, which is our target. Please move to page 14. Achievements by regional units in the first quarter. Let me share a couple of cases. Japan successfully grew existing business, and overseas used assets to increase delivery. The first one is Japan's large system digitization project for the central government and ministries. By harnessing our strengths of deployment capability to build cloud and others, we promoted cloud integration for the client and won a mega deal of around 50 billion yen. This has helped digitize government services as well as improve user experience. For the case leveraging assets to drive business, in EMEAL, the leading global energy corporation signed a framework contract with us for continued long-term use of assets. These key assets have been provided mainly in Europe, already for over 5 clients, helping the energy sector to improve operational management efficiency. Page 15, please. This shows the progress on Gen AI initiatives. In order to increase software development productivity, fiscal year 23 mainly focused on implementation and testing phases in using Gen AI tools, and 140 projects applied Gen AI helped improve productivity by 7%. Going forward, as mentioned earlier, not only at the implementing and testing phases, but throughout all phases in the project management life cycle, we will promote the use of Gen AI. The target number of such projects is 200 in fiscal year 24 and 400 in fiscal year 25, where 20% productivity improvement is targeted. Page 16, please. This shows progress on data center business. Q1 recorded $590 million in sales, with EBITDA $190 million, steadily achieving year-on-year growth. Going forward, the data center market is expected to enjoy strong demand driven by Gen AI and others, to which we will continue to respond, and we target to increase EBITDA 1.7 times more than that in fiscal year 23 with continued aggressive investment. This shows M&A status. In order to nimbly acquire necessary capabilities to drive domestic business, by the end of the current midterm plan in fiscal year 25, we will look into M&A opportunities at a level of 100 billion yen. In Q1, we have taken steps to make Jastec a subsidiary company, signed a capital and business alliance with TerraSky, and turned GHL Systems into a subsidiary. Page 18, please. Next, the progress of the overseas business combination. In Q1, we mainly promoted overseas business combination and integrated IT systems with a spend of 1.6 billion yen. This fiscal year plans to spend 30 billion yen for business combination costs, and in order to accelerate synergies, we will mainly work on transforming business portfolio, optimizing corporate functions and IT systems, and we plan to spend more towards the second half of the fiscal year. Page 19, please. Finally, let me cover the status of interest-bearing debt and financial income and costs. Q1 recorded 2.4 trillion yen in consolidated interest-bearing debt balance and a drop of 16.7 billion yen in financial income and costs, which is on track as per our expectation. Towards fiscal year 25, we are promoting initiatives toward an asset-light model by using REIT and other instruments, through which we will control the increase of interest-bearing debt and financial costs. Recent actions include sales of our subsidiary, which is listed in the market, XNet Corporation, and sold Recruit companies' shares that we used to strategically own, and we are making efforts to increase capital efficiency. This concludes my presentation. Thank you for listening.